Hey, welcome to the Guaranteed Retirement Guy Show. So, today I'm going to talk to you a little bit about annuity payout options. There's a lot of different options to consider. So, when you're looking at investing into an annuity, you want maybe growth, maybe you want income, maybe you're just looking for market protection. There's a lot of different payout options that are available. So I'm going to go over each one of them just briefly, just to kind of tell you what you have access to when you put money into your annuity. So you need to think about this before you invest into an annuity so that you make sure, whatever payout option you're looking for, you want to make sure that it is actually included in your particular annuity that you're looking at. All right. So the first one is the death benefit. Now, a lot of times people ask, well, is this life insurance? No, annuities are not life insurance. They're sold by life insurance companies. But when you're thinking about a death benefit, typically when you pass away, like if you're taking money out of an annuity, maybe in the form of income or interest payments, a lot of people will ask me, where does my money go? If I pass away, or if I'm taking joint income payments, maybe I'm married, what happens when both of us pass away? Well, whatever money is left in there, it just goes to your beneficiaries. So it really doesn't matter who the beneficiary is. That money's yours. And if you haven't used it all the way up, then that money definitely goes to your estate or your beneficiaries or whoever in the form of a death benefit. In fact, there are some companies that will really give a lot more. For instance, your death benefit might be it's always your account value. So if your account value is $1 million, then your beneficiaries can take $1 million. Or there are some annuity companies that will give them a 5-year payout. And so instead of getting a million, they might get 2 million over 5 years. So definitely pays to take that payment out over a longer period of time versus a shorter amount. All right. So the next one is fixed amount, also called systematic withdrawal. Really, what that is just let's say you put, I don't know, let's say you put a $500,000 in, and maybe you don't want to activate the guaranteed income payments, but you just want to take out a certain amount, a systematic withdrawal amount every single year. So maybe it's $30,000 a year. You're like, no matter what, I just want $30,000 coming out a year. I don't care what it earns. I know it's protected against market loss, but I need 30,000. So I'll just take it out, and then I'll just run the account balance down to zero at some point. So sometimes that works. Sometimes that annuity will stay up in value for a while, and then just depending on the annuity provider, sometimes it'll go down really fast. Okay. All right. The next one is certain period or period certain annuities. And all that is you're just electing to take an income payout. Maybe you put in a few $100,000 and you need to have a guaranteed income stream for, let's say, 10 years. Okay. So what you're looking at is you want it for at least 10 years. And if you die within that 10 years, you want it to go to a certain beneficiary. So unlike a joint payout option where you're married and the income is joint and it goes to you, and if you pass away, it goes to your spouse, joint income payout. The difference is with the period certain, maybe you have a child at home, maybe a grown child that needs some special care. Maybe there are special needs. And so a lot of times people are worried about that. And so in order to have that happen, you might purchase a period certain annuity that will give you a guaranteed amount of income for 30 years. And so it might be a little bit lower income, might be a little bit higher income, depending on what your age is. But what you want from the insurance company is you want a guaranteed payout for 30 years, no matter what. So if you die after 15 years, you know that for the next 15 years after that, that payout is going to continue guaranteed to your beneficiary. And if that's your son or your daughter or anyone else, then that will continue to pay out. Okay, joint and survivor life. Basically what that is, that's the option I was talking about before, where if you're married, you're looking for income for both you and your spouse. And really that is the most popular option that people set up with me, because a lot of my clients are married and they want the income to continue to their spouse. They want to make sure that the income does not stop when they pass away. But typically the income is a little bit lower just because the insurance company is, they're guaranteeing the income for both you and your spouse. And if your spouse is a whole lot younger, that will definitely lower that income amount because, they're on the hook for someone who's a lot lower for a lot longer. Okay. The life only option is another payout where I do have several clients who are single or divorced or never married and they don't plan on it and they want to have straight income just to themselves, which is the highest income payout usually. And if you're a man, it's usually the highest income available really in the marketplace compared to if you're a woman, because as a woman, you typically live longer. And so insurance companies know this. And so they don't guarantee as much income for someone who's a female versus someone who's a male. But again, it's something to look at. I mean, I always compare across the board with when I'm talking to couples and they're looking at their different ages, some annuities work better than others. Okay. So it just depends. And if you have a spouse that's significantly younger than you, there are only certain insurance companies that will cover that. But I have access to everything. So I'll show it all to you. Okay. Life with period cert. Okay. This is also called the guaranteed term. So basically, what this one is you want income for life, but you want to make sure that if you pass away, that there is a certain amount of years that they'll continue to pay out to a beneficiary. Okay, so it's kind of like a hybrid where you've got the life option, but you also got the period certain option. So typically these payouts are a little bit less than what you get if you just choose, if you just choose a straight joint life or single life option. But it also gives you some peace of mind knowing that if you feel like you're going to pass away and maybe you're single, but you still want that income to go to someone else, maybe you're sick and you feel like, hey, I'm not going to live for another 10 years. I want to make sure this keeps on going out for maybe 15 years total. I want the life option just in case I live longer, but I want to go out for at least 15 years because I got a beneficiary that I want the income to keep going to. So I want to make sure that I can get as much as I can. So there are annuities that are set up for that. Okay, and then the last option is the lump sum payment. And that's basically for someone who puts money into, let's say, an index annuity, and they just let it ride, they let it grow. Whatever the index makes, it earns, and it compounds over the next maybe 10, 15 years. And then maybe at the end of that, you just want to take all your money out in a lump sum. Just remember, if you do that, it's going to be a taxable event because all of a sudden you're going to be paid out all those extra earnings. If it's a non-qualified annuity, you're certainly not being taxed on the money that you put in, but any earnings on top of it, you are taxed on immediately. So remember that. Of course, if it's an IRA or some IRA or Roth IRA that holds those funds, then it's subject to those tax rules or non-taxable rules, just depending on which one you have. So, anyways, I hope this helps. There's a lot of different payout options to consider when you're looking at annuities. Everyone has different goals. You've got maybe you just want growth and you just want market protection. There's annuities for those. If you're looking for the highest income amount, there are annuities that work best for income, but maybe not so much for growth, which is fine if you don't need it to pass on to heirs and you want to maximize the ROI, the income ROI that you're going to receive from your hard earned savings, that you've been building up for the last 30 years. You want to have the highest amount of income. Typically people will reach out to me for that because they want as much income as possible. You've earned it. You want as much as you can. So maybe you have a $500,000 and you want to get 2 million of income. You can do that. There's a lot of great options out there. So if you want me to go over that with you, I'm happy to do so. Just book a call with me and you'll see the link below this video. It goes directly to my calendar, or there's another link for a video if you want to watch a little bit more before you book a call. That's fine too. So happy to help, happy to provide as much information as you need to make an informed decision. So thanks again for watching, and I'll see you in the next video.